Welcome back to the channel, Real Life Traders. This is Joey with Real Life Trading UK. I want to talk to you today about a strategy that I have been using. It's been highly successful in the Forex market for me over the last couple of months. It's a very simple strategy, just utilizes a couple of moving averages and trend lines. And let's get into it real quick. Right now, we're looking at the Euro Canadian dollar on the 1 hour chart. And on my chart, the black candles go down, the white candles go up. There's the volume correlating with the same color of the candles. And then over here, the red line on my chart is the 21 exponential moving average. And the blue line is the 8 exponential moving average. And this is really the only two indicators that I use on my chart besides the volume bars. Now, I like to see nice, good trends. All right, overall trends. Right here, we're going down, and it's pretty obvious that we're going down. Another way that I know it's going down is that the 8 EMA is below the 21 EMA. So we're clearly in a downtrend on the 1 hour chart right here. Another thing so when I start seeing impulsive moves like this, we've got a nice impulsive move, a little bit of consolidation to the right. All right. And then we have another impulsive move. And then some more consolidation. All right. This is what I like to see. I like to see this all day long when I get to the charts. If I start seeing things like this, then I can start making trades. I drew a trend line and I connect the bodies of my trend lines. I like connecting the bodies I'm sorry, not the bodies of my trend lines, but the bodies of my candlesticks. I connect the bodies of my candlesticks because I find that to give me the best entries. It's just a personal opinion. You don't have to do it that way. If you always draw on trend lines using your wicks, that's perfectly fine. I prefer to use the bodies, and I found that with this strategy, you tend to end up getting a better entry with it. Not every time, but most of the time. All right, so I'm looking for, now that I've got this trend line drawn, I am looking for a candlestick to break down through this trend line. Now, I'm not going to take as soon as it breaks, I'm not going to jump into the trade and try and take the breakdown of it. I don't like taking breakdowns or breakouts. They tend to run back against me, and I don't like to be in too much drawdown. I would rather see a breakthrough and then a retracement before the continuation. And I want to get in on the retracement. Okay. So that's kind of what we're looking for right now. Next candle goes up, then we get a decent little push right down through here. Okay. So this is a nice break through that trend line. As you can see, this trend line, it interacted here. We didn't get a close below it all the way through here. 2 candles broke through it, but did not close below that trend line. And then all of the rest of these candles stay up. This is the first candle in literally almost 2 days, day and a half, that has broken through this trend line. So I consider that kind of powerful. So I'm going to try and set up a trade. It's going to be a short trade because obviously I'm going with the trend. This is broken down. I want this to continue further down. Now I'm going to set it up based on probably somewhere around in here. I don't want to get too close up in here. I think that might be too close to the trend line. Sometimes you can do that, but I want to be in this trade. And another reason why I'm going to put it on that is if you look, you see how you've got a bunch of wicks here, a wick here, a wick here, and then these 2 candlesticks that are right on the line in which I have put my entry. And then 2, I'm going to try and make it a 1-to-1. I only want to make 20 pips. Therefore, I only want to lose 20 pips. And that's kind of my strategy in doing that. Let me go back because that is not correct with TradingView and the way I have it set up. I have to put 200 ticks on it. It's on the tick. All right. It needs to be on the pip, but it's on the tick. So, and this is where I want to be. I want to get entered into this trade and then take it on the way down. Let me just stretch this out a little bit. All right. And as you can see, we got a lot of room for it. We got a lot of room for the 20 pips. We've still got probably 5 or 6 more pips down here that we could probably go for. But I personally only go for 20 pips. And honestly, around the 10 pip area, I start moving and trailing my stop. We'll get to that. All right, so we got in here. It actually came up, tested these moving averages, and then immediately rejected down. So we were in the red for quite some time. That would have made me nervous. But it didn't hit our stop, you know. And again, you've got to be okay with seeing red in your profit line. Sometimes when you are in the middle of a trade, you are going to go red more times than not. That's just where you have to mitigate your risk. You have to be okay. When I take this trade, if I lose 20 pips, I lose 20 pips. That's okay with me. And because I feel like the probability of me making 20 pips is higher than losing 20 pips. And in this case, I almost lost the trade, but I did not. Very next candle comes down. Wow. And it almost gets us immediately out of the trade. And then the next candle does. So roughly 2.5, 3 hours, and we've made 20 pips on that trade. And that's basically the strategy. I mean, that's really what it is. The only other thing that I look for in this crossing down, let me go back and I'll talk about it a little bit. Get this out of the way. Are these moving averages. So the red moving average is 21, the blue moving average is the 8. Both of them are exponential moving averages. And I use these moving averages because of the community real life trading. Matt DeLong has created an indicator called the Momo, or we call it the Momo, in which when the 8 and the 21 moving averages cross each other, it gives a signal in which we were probably going into a trend change. So I'm fortunate enough to have been able to use these moving averages outside of the Momo, because the Momo has a few other lines and stuff that go with it that just kind of make the chart a little messy for me. And I decided just to use the 8 and the 21, and I gauge that. And as you can see, the 8 and the 21 are trying to cross right here as it's breaking through the trend line. So that's another indication that this is going to continue further down. And on the next one, as you can see, we did cross. Okay. So, and that just leads me to believe that I'm going to be right more times than not when I get a breakthrough a trend line and a cross of the EMAs. And in this case, it did. We ended up making it 20 pips right there. So now let's go to, get this out of the way. Let's go to the euro pound. I'll show you another trade that was set up earlier for me, and it was this right here. All right, so let's actually take it one step further back. Again, I like to connect the bodies of my candlesticks. So when I do, I come in here and I look at the body there, and I connect the body there, and I wait. And you know, we are already in the downtrend. The 8 and the 21 have already crossed. So if this trend line gets broken, I can only assume that it's going to go down further. Interacts with the trend line that I have drawn before moving higher. And then we get a nice slam through, but it doesn't stay down. And this is the reason why I don't take breakouts, because if I had taken a breakout there, might have been stopped out on the next candle or so, I would not be confident in the trade. This candlestick breaking down through, though, pretty confident in that one. Really like it. So here I'm going to go ahead and set up my trade, and I will set up the trade based on the bottoms of these candle bodies and the tops of these candle bodies. And again, we are looking for 20 pips. Nope. All right. And in this case, I'm actually going to drop this down to about 14 pips, because this candle right here has got a lot of volume in it. And I just feel like if we break above this, we're above the moving averages, we're probably going to continue higher. And I'm going to just mitigate my risk that way. So this is a better than a 1-to-1. It's almost 1.5. Very next candle tags us in. Next candle, we're good. That next candle, look at that. Wow, almost gets us out. And then the next candle does. But wow, that could have easily went ahead and taken profits right there. But again, 3 hours down, and we've already made 20 more pips. And that's the way the strategy works. These trend lines are very powerful. If we go back to right here, you can see that it looks like we're about to break higher, but remember, we are in a strong downtrend here. You know, this is a very strong downtrend. So I'm looking short here, and obviously we know it comes down because we know it hits this. But if I'm looking at that, this almost looked exactly like this. Wow, that's a pretty strong candle right there. To take the retest of it, look at that. Let's see. We have been able to get in. I don't know if I would have taken this trade just because of how strong that candle was. But as you can see, you can keep taking trades like this over and over again. There's a lot of setups that happen multiple times. And yeah, we would have had to wait until we got over here in order to be able to get out of that trade. But as you can see, it still would have worked out. It just would have taken a little bit longer than the other ones. So that's my trading strategy. Very easy, very simple technique that you can use. Again, if you have any more questions, this is my strategy. If you have any more questions, you can leave them in the comments or email me directly at joey@reallifetrading.com. I'll be more than happy to talk with you about it, answer any questions you have, even set up a coaching session and go over on maybe how to adapt this strategy to your type of trading. Feel free to go to reallifetrading.com. There's a whole bunch of free content over there. It's a website that was life-changing to me when I found it. And then Real Life Trading UK at the end of this month, October 25th, we're going to start 2 free weeks in which you can just join in for free, listen to the rooms, listen to the expertise of some of the traders that we have there, Forex, stocks, options, credit spreads, everything that you could possibly imagine dealing with the markets. I will personally be hosting with Dean Bradshaw Coffee and Currency on Monday mornings. It's going to be our room, podcast type room where we look at Forex. It's all Forex. We look at Forex, we look at setups. He has a different strategy in Forex than I do. So I think it's going to be a really good show, really good room to watch. So across those 2 weeks, you can see that twice. And I just join us. It's going to be a blast. Again, if you have any questions about my strategy, email me, joey@reallifetrading.com. And I'll see you on the next one. Thank you for watching.